On this episode of Coffee and Property, we're going to be delving into the deep subject of bridging finance and looking at 7 ways that you can utilise this tool to get further with your property investments and also demystifying some of the issues with it as well. So if you want to learn more about how you can leverage bridging finance in your next deal, stick around to the end of this video. So what is bridging finance and what is its context around how you might use this in your property deals? Well, bridging finance is essentially just that. It's a way of bridging from A to B. Now, you may use this in several different contexts, but 2 of the main ones would be if you need to exercise a purchase very quickly. Bridging finance is amazing for that. Things can be arranged in just a few short days. Or it might well be that the property needs substantial works in order to either sell the property or to get it ready for a longer term mortgage. Short-term finance is just that, short-term, anywhere between a month and usually a maximum of about 36 months. But it's the perfect way to get a property ready for your end goal and utilise something without all of the penalties that come along with a regular mortgage. So how much are the interest rates on a bridging loan? Well, it really depends on the type of deal that you have at hand. Now, you could range from something very straightforward, perhaps where you're moving into the property yourself, all the way up to a bridging lender that will do things very quickly on a very complex deal. The rates could change astronomically throughout that period. For example, in 2024, the cheapest rate that I've seen currently is around 0.5% per month. That is if you're buying a very straightforward property and you're moving into it yourself, what we would call a regulated bridge. The more expensive ones are if you're paying for a certain privilege. Let's say, for example, you need to move very quickly on a deal and the money has to be there within a few days. We would have to use a very specific lender at that stage that may charge 1.5% to 2% per month. Generally, things are priced according to risk. So if you've got something very straightforward, the likelihood is that the interest rate will be charged at a much less rate on a monthly basis. However, if there's a lot of works to be done, if there's a lot of development work, or if you're paying for something such as speed or a quirk, it's likely that that will cost a lot more because it's all to do with the risk of that lender. But generally speaking, you can see anything from 0.5% up to around 2% per month in the present market. Don't forget as well that it's not just that you have to factor in. You've also got to factor in an arrangement fee, which currently with most lenders is around 2%. You've then got 2 lots of legals, 2 lots. One to cover yourself and one to cover the funding line of the lender that you're working with. You've also got to factor in valuation costs. Now this will vary depending on the type of property, whether you're doing works, whether you're not, how many properties are in that transaction, but all of these things do add up. So remember, the interest is charged per month. You've got arrangement fees, legal fees, and you've also got your broker fee and your valuation cost to factor in. So is it possible to repay a loan early? Well, this is the beauty of bridging, unlike a mortgage. If you was to take out a fixed mortgage for say 5 years, should you pay that loan back early, you'll have something called an early repayment charge that's payable on that loan throughout the first 5 years at least of that deal. The difference with bridging is that if you pay it back early, unless you have an exit fee, you will actually get back any unspent interest that you've paid for and not used. For example, let's say you took out a 12-month interest loan. Now, if you were to take out a bridge over a 12-month period, the likelihood is that the bridging lender will retain the interest on day one. This means that they'll factor in 12 months worth of interest and deduct it or retain it at the beginning of the loan so that you have no monthly payments to make. In this instance, should you pay this back within, say, 6 months, you've paid for 12 but you've only used 6, the lender would then reimburse you 6 months worth of interest. Now sadly, they don't give this back to you by way of cash, but what they will do is give you a smaller loan to pay back at the very end when you redeem that loan on either sale of property or remortgage. So it's really beneficial from that point of view. Now, some lenders do have a clause that you have to stay with them for at least 3 months. Other lenders have an exit fee, which is normally 1 month's worth of interest. It's always worth factoring this in at the very beginning when you're trying to find a lender or you're working with a broker to choose a lender, to ensure that you understand these things so you know exactly where you stand with each loan. So an interesting question, can you borrow all of the money? Is there such a thing as 100% funding? Well, technically yes. Now there's two ways that this could work. The first way is by doing something called a cross-collateralized bridge. Now, what's the easiest way to comprehend this? Well, think about it this way. Let's say you've got a property in the background with no mortgage. And let's say you found another property that you want to buy, but you don't have a huge amount of cash. What lenders could do is do a cross-charge over both properties. So they're raising money against your existing one and raising money against the future one. This can usually result, depending on the values of the property, in up to 100% financing. And we're doing several of these in the Harvey Bowes team at the moment. The other way of doing this is by buying a property where either it's very below market value or there's a substantial uplift, such as a title split. In those instances, we still work with bridging lenders that can give you up to 100% of the purchase price on day one, subject to the price you're paying and the price that it's worth. Several things come into this, including how the lender will value it. Will they lend on the open market value? Will they lend on vacant possession? That's quite an important one. And also, if it's a block of flats, how many flats are in there? Because most lenders will actually cap at 11 flats or 10 flats normally at the market value. Anything over that, they will look at an investment or a block value, which can actually give a bit of a discount. So what we would need to do up front is establish what the deal is, what it's worth and what you're paying for it, and ensure that we work in harmony with the right lender to get you as much money on day one as possible. Yes, you can borrow all of the works money. Now this is the beauty of using bridging finance unlike a mortgage. The beauty of this is that not only can you borrow, generally speaking, up to 70% of your purchase price with these type of lenders, but you can also borrow up to 100% of the works costs. Now this means if you've got just enough money to get into a deal, but you don't necessarily have all the money for the refurb, you can use a drawdown facility that gives you your money in arrears. So what does this actually look like? Well, this would mean that you would carry out a certain amount of works as agreed with the lender. They would then send out a QS or an account handler to look at this, ensure that the works were done on time and according to what was agreed, and then they'll reimburse you that money so that you can start again. Now this is normally done in several what they call tranches, so separate drawdowns of funds so that you can continue building up momentum in that workload all the way through to completion of those works. The great thing is when you either sell the property or refinance it, you'll then be able to clear that bridging loan and the refurbishment loan quite comfortably, because all the lenders will look at lending up to a maximum usually of 65 or 70% of the end value. Now this is particularly useful if you're doing a HMO conversion or you're doing a substantial uplift to a property, because the works costs and the purchase price will generally be significantly lower than the end value. So talk to your broker, or in particular us at Harvey Bowes, about how the lenders will see this and how that loan will be structured to make it work for you. So it's not just property that you can borrow against. For example, many lenders will allow you to borrow against machinery. You can borrow against physical assets, watches, cars, antiques, but there's also some lenders out there that will lend against shares. So if you've got stocks and shares or you invest in the stock market, you can actually have holders against those shares in order to borrow money without having to physically sell them. Now, don't forget as well, there are also several lenders that we work with that allow you to borrow against a business. So if you're looking to purchase, say, a business and the property, the lender themselves can actually lend against the loan book and against the property that's involved in running that business. Generally, you'll need around 2 years at least worth of accounts on that, but it's a great way of borrowing outside of it just being a property asset. So, a really important question, how do you choose the right lender? Well, this is where working with a broker, and a very good broker, is absolutely paramount, because ultimately you might not necessarily know who the right lenders are for that particular deal that you're undertaking. You might have heard of one lender or have direct access to a certain lender, but it doesn't necessarily mean they're the right one for you. When you work with a good broker, they ensure that not only do they understand the market, but they understand where the lenders are at any one point in time. This means that it's a constant case of understanding the change within the marketplace. Some lenders that are very good at lending on a particular property type might not always be the same. So when you're working with an excellent broker that understands bridging and understands the nuances of the criteria within each of these lenders, you can ensure that you're working with the very best. Now, the great thing is as well is the impartiality. Now, one thing to bear in mind is that when you work with a broker, they will likely charge you a broker fee. In fact, most good brokers do charge you a broker fee for their time, but they do also get a small commission from the lender when they introduce business to them. So for example, you come and undertake a bridging loan, we place that loan with a lender, they will then give us a small commission by way of introducing that work. Now, most of the lenders, certainly in a brokerage where they undertake a lot of bridging, will give the same general commission across the board. So this actually means that from a broker's perspective, they're not going to be concerned about how much money they make on the deal because it's going to be about the same across the board. They're going to be more concerned about the deal physically progressing. So some lenders will be very good for speed. Some lenders will lend you works money. Some lenders will do higher loan to value on day one. Some have a more favourable approach to deals that are below market value. There's so many lenders and active relationships amongst the lenders and the brokers that it's all about understanding the niches of the deal that you've got to hand. So again, working with a good broker, they're not going to be concerned about the money that they make for the deal because it's going to be about the same across the board. They could be more concerned about ensuring that the deal can physically get pushed through with that lender at the appropriate pace for what you need. So there you have it. 7 ways that you can utilise bridging, and hopefully that gives you a deeper understanding of what this amazing tool can do for you. If you need any help or support, don't forget to reach out or leave a comment below. Also subscribe to this channel for future updates and tips on how you can get this type of funding sorted quickly and accurately. We hope you enjoy the rest of your day, enjoy your coffee, and we'll see you again very soon. Take care.
Looking to purchase a property for investment or development? Look no further. At Harvey Bose, we pride ourselves in finding ways to make complex and niche deals work. Making sure to explore all the possible strategies and matching the right financing structure to the needs of each investor. Contact Harvey Bose today. Property finance by investors, for investors.